LocationScore Lads here talking about stock on market, or more precisely, the percentage of stock on market. So, Bryce, what's stock on market?
Mate, well, this would be a favourite of yours, wouldn't it? Because this is ultimately the measure of demand or supply in the marketplace. Because if you've got, more properties available on the market than there are buyers, well, that's the enemy of capital growth, isn't it?
You stole my thunder, yeah. Supply is the absolute enemy of property investors. That will kill capital growth like nothing else does. So it's a really important indicator, and it's not about the number of properties, it's about the percentage of the properties in the market. So you could have a very large market with 10,000 houses, and if you've only got 10 of them that are available for sale, then that is a very low percentage of stock on market. And the reverse could be true. You could have 10 in a market where there's only 100 properties, and that would be 10%. So, I mean, I don't know if there is a market that small, but
so but when you started this research, was this the indicator that kicked it off for you? Because ultimately, it's on the supply side, it's really the fundamental one.
Yeah, it is. I mean, there are a lot of people who focus on demand, and what I've noticed is that it seems to be the chronic shortage of supply that has a greater impact than the high demand. I guess what you find is that there are markets that appeal to developers because they're in the news about infrastructure projects going on, and these are all focused on what drives demand. What is it that makes the location appealing to buyers and to tenants? But really, the markets that seem to have the greatest capital growth are the ones that have perhaps moderate demand, or at least sufficient, and just chronic undersupply, and you don't hear about them. And this is a great indicator for uncovering them.
Yeah, it's a good point, isn't it, Ben? Because a lot of people get seduced by, there's people going over there in droves, we must go there and follow the people, but it's so much more than that.
It is so much more. I mean, I think what we're trying to talk about here is what is the trend line doing? So what's actually happening? So if the stock on market is actually coming down as opposed to going up. So keeping it very simple, we're tracking and scoring the percentage of stock on market, and the lower the percentage goes over time, because each market is being measured on a monthly basis as part of the scoring that we're doing, and so it's really important to understand as that's starting to get smaller and smaller as a percentage, that's actually a good news story for us in regards to potential capital growth.
Yeah, I mean, you can picture these sort of markets where you've got an enormous number of people turning up to an open inspection because they've been waiting for weeks and weeks, maybe even months, for another property to come on the market. It's when those markets are limited in the stock that they've got that's of appeal to investors because of the pressure on prices to grow. So it's capital growth, it is completely dependent on supply and demand, and you can't just ignore supply.
That's right.
I mean, I see it at the coalface, that very thing where, we target properties and suburbs that we know that's got that demand, and then we know that there's 3 or 4 buyers and there's only one property comes up. We actually see that because you just by sheer competition, that person doesn't want to miss it, that person doesn't want to miss it, there's not many around, so we're going to put our best foot forward, and in a low interest rate environment, we're seeing that even more. So
I agree, and I think if you actually look at the fundamentals, what we're talking about is that parcel of land has been utilised. Okay, because when we talk about outer city areas, greenfield areas, new estates, there can be supply that's turned on in terms of new lots of land for sale. When we get closer into some of the areas that are fully utilised, how do we create new supply in those areas? Well, we can knock down a couple of houses and build medium or high density accommodation, or we can knock down a house and build 2. So, this is where you can potentially get caught in regards to some large amount of supply coming online through, a rezoning from low density to medium or high density in certain main roads and so forth. And so that's what you've got to be careful of in terms of some of that future supply. But in this case, we're measuring the current level of supply in that market, aren't we?
Yeah.
Is it easy enough to get the data?
It is. There are complexities about the base count. How many houses are there? How many units are there in this market? And what's available? So let's say you're looking at a unit market, and listed for sale there are only 3 units. A 1-bedroom, a 2-bedroom and a 3-bedroom, all in the same complex. And to me that is typical of a developer releasing a big block, and they've just got one sample of a 1-bedroom, a 2-bedroom and a 3-bedroom, but really there could be 100 in the block. So you've only got a count of 3 when really there should be a count of 100.
Yep.
So sometimes the statistic can get anomalous, particularly in unit markets like that. There's also issues about like the number of properties to begin with. Where do you get that data from? And some of it can be based on census data, which can get out of date because it's only sampled every 5 years. So it can be a little bit volatile. And as Ben mentioned, you probably want to look at an historical chart to see what the line of best fit is, rather than looking at individual figures from month to month, because it can be volatile.
So it'd be fair to say there's a fair bit of weighting in this particular indicator for you.
Yeah, well, it is the
in your algorithm.
Yes, that's right. When you're combining indicators, and you do need to look at multiple indicators, this one features very prominently because it is straight up and down supply.
So there you have it. Percentage of stock on market, a really important indicator as part of the location score.